Okay, so good evening, or maybe afternoon, wherever you are. It's actually afternoon where I am, but we will, I know some of you are probably in the later time zone, so it's almost bedtime. This is the Stockscores Virtual Trading Club, and the agenda for tonight, I'll give a little introduction. I'm going to talk about this concept of pattern recognition in multiple time frames, which will be our theme for tonight. We'll do some market analysis, give you a sense of what the overall market is doing. Position trading, market scans, we'll do a couple of those. We'll talk about day trading, what I did today, talk about some upcoming events or some potential events, and do a couple polls at the end. So on the introduction point, someone asked me the other day, what was the genesis of the Stockscores Virtual Trading Club? For those that have been members of Stockscores for a while, you will know that once upon a time I used to have Stockscores trading clubs in different cities in Canada, Vancouver, Edmonton, Calgary, the odd time in Toronto. And, I would sort of rent a hotel room or something. We'd have a group of people come out and we'd talk the markets, and it was basically open to anyone. I think I charged $10 just to cover the costs, and it was quite a popular thing. It's something I had to stop simply for lack of time, but I've sort of been freeing up some of my time these days, and I thought it was a good thing to review again. And now, of course, with technology the way it is, I can do it from wherever I am and wherever you are, and it is a nice way to sort of keep in touch with Stockscores users and present some ideas that hopefully will make you better investors and better traders. So that's why I'm doing this, or where it came from. There's really no agenda other than that. Tonight's talk, as I said, we're going to do some analysis, but the theme throughout the night, and the thing I'll emphasize, is looking for patterns and doing so in multiple time frames. So whether I'm day trading, swing trading, position trading, I'm all about pattern recognition. Ascending triangles, flags, channels, trend lines, all that kind of stuff is really what most of my trades are based on. And I focus in on the stocks that are abnormal. Anyone that's taken one of my courses knows that I'm all about looking for abnormal activity. But, the pattern recognition is what we emphasize on the abnormal stocks or abnormal markets and that sort of thing. And one of the things that I've really found useful in the last little while, because the market's been a bit of a grind lately, is to do that in multiple time frames. So, if I like the pattern on a 2-minute, I'll take a look at the 13-minute or the daily and see where are support and resistance and how do those lines affect the validity of the trade. And, I traded the gold mining stocks today through an ETF called Nugget, N-U-G-T, and I was really aware of what the patterns were. When I trade the S&P 500 indexes, I use some of the leveraged ETFs, SDS and SSO. I'm always looking at them on 4 time frames, which I'll show you when I go to my TradeStation screen. Now, you may not be a day trader. If you're a longer term trader, then you might only look at daily and weeklies, but it's not a bad idea to look at the 30-minute as well. So, if you want to buy some of the oil stocks that look like they're trying to bottom, well, look at them on multiple time frames. And even if they look good on a short-term time frame, ask yourself on the long-term time frame, are they really breaking downward trend lines or breaking from rising bottoms, whatever. So that's going to be the theme tonight. And as I go through, I was going to, give you a bunch of lessons, but I thought it would just be better to apply those concepts as we look at charts. So the next thing I want to do is market analysis and just go through the charts that I look at every week for the Stockscores Market Minutes video. I just have to get my window to pop up here. For some reason it's not. Just bear with me for a second. Why is it not working? I'll try doing it this way. I'm going to just try this a different way here. Okay, well, for some reason it doesn't want to come up, so I'll just start a new window. So I'm just going to log into Stockscores. And we'll just start by looking at some charts. So let's begin, since Canada had an election last night, let's just take a look at the TSX index and do some analysis of that. Now, first thing that comes to mind when I look at this daily chart is it's in a downward trend. And if you're an investor in Canadian stocks, it's been a bit of a grind for some time. it's not just the oil stocks and the gold stocks which have really suffered. Most stocks in Canada really aren't doing all that well. The fact that the oil market is lousy means that the bank stocks suffer because a lot of their investment banking revenue comes from energy. And then, of course, they have customers who are buying houses. Well, Alberta's not maybe doing so hot, so one of the hot markets in Canada, less of a quality market for the banks, that sort of thing. So, that's a very overly simplified analysis, but the reality is when you look at this chart, you see that since April we've been moving down, and if we went back a little farther, it hasn't gone anywhere in basically 2 years. In fact, we could probably even go back a little farther here, 3 years. So for almost 3 years, this market's just been grinding sideways. Now, here was a hot oil market, and in August of 2014, that's when oil started to suffer, and that's really what's dragged down the commodity-heavy Toronto Stock Exchange. And a lot of that's based on the strength of the US dollar, which we'll talk about in a moment. So now looking at the 6-month on a daily interval, I'm going to just draw a trend line on here, and I'm going to use a little tool I like to use called Snagit. It's a program you can download from the company's website, snagit.com, I believe, or TechSmith is the name of the company. But what it allows me to do is just draw lines in my charts really easily, and I'm just going to draw a downward sloping trend line there, make it red since red is a better color for pessimism. And you can see that we're right at the downward trend line. We fell away from it. One of my rules in chart analysis is that when stocks or markets run away from the trend line, they almost always come back to it. And we really ran away from the trend line here in the sell-off in August, and we've now come back to it. We have not broken the downward trend line. We are moving along the downward trend line, but for things to improve in Canada, we need to see a break to the upside, breaking that downward trend line. So that's what, if you're a Canadian investor and maybe you've got a lot of cash, I would be pretty conservative until we see a break of that downward trend line. Now you can do that on individual sectors as well. We could look at, for example, the energy sector in Canada, which is symbol T.XEG. And there you can see that its downward trend line has been broken this month. And I've talked about that in my newsletters. That's the short-term one. Now remember I talked about multiple time frame analysis. So that is the daily chart of energy. What happens when we look at the 3-year chart of energy? Well, now you see maybe it hasn't quite broken the downward trend line. Let's take a look here. We'll just snag it, and then I can draw on it. And we'll just draw a line across the tops, and we just got through it there. So that is good. I wouldn't say it's a real definitive break. If you wanted to draw the trend line a little more along those lines, but that's still pretty good upside to that. So I do think the energy market is trying to turn around. It's not a lock yet. I made my first sort of call on an energy bottom here when it came back from hitting the lows and came back to close well above its open that week. And then, 6 weeks later, it kind of broke the trend line. It's just sort of bouncing along it still. And I'd like to see a confirming break to the upside from this flag pattern that's forming. And at that point, I think you can start to get more aggressive with energy stocks, and that will probably also bring a break in the Toronto Stock Exchange market overall. Just going back to the XIU, let's just make a 3-year chart here. So you can see there we are below that downward trend line. If we do break that, not considerable upside, we're going to run into resistance here. This market has really underperformed the US markets because of the heavy weighting of commodity stocks. And we'll come back to the reason for that weakness in commodity stocks in a moment. Let's now look at the US market. We'll take a look at the SPY. The S&P 500, I'm going to just make this a little longer term here. So you can see we had a break of an upward trend line back in August. We've been trying to rally back. And now the question is, are we breaking the downward trend line? I would say right now we're at a real critical place. We're going to draw some lines on this and you'll see why. So just go like this. And there's our, sort of downward trend line that started building July into August. And remember I said when markets or stocks run away from the trend line, they almost always come back. So that I would say is the trend line. It means we have a little more upside till we hit that, but it's close. And you could probably even draw this more like that. So we're kind of right at a resistance level. And if you've been trading the market the last few days, you'll know that, well, in the last 3 days, you can see it there. We've really been stuck in this sort of narrow sideways trading range. It's a little more obvious when I make this chart. This is a 10-day, 30-minute chart. So shows what's been happening over the last 10 days. We had a good little rally that hit resistance. We're also hitting that downward trend line. And as a result, the markets are kind of grinding their way sideways. When markets hit resistance, they will always, not always, almost always stall at resistance. When they rally into resistance, they always get stuck there and they stall. Then the question becomes, do they break through the resistance or do they turn lower from it? And it's a tough one to answer. I would say that the trend usually rules. And so my sense is it's maybe a 60% chance we roll over and move lower from here. But I wouldn't make a trade on that. I wouldn't go out and buy negative inverse ETFs thinking that the market's going to roll over, because it's really hard to say whether anything like that's going to happen. We could also break to the upside and break through that downward trend line. Now, if that happens, let's say we break this trend line. So again, just visualizing a little trend line right along here. If we break that, then the question will be, do we hit new highs or do we make a falling top and roll over? This could be the falling top. We could get stuck here, roll over, and then we're going to see volatility pick up again, fear pick up again as the market rolls over. The one thing that the market has going for it right now is that it's the start of the traditionally strong time of year that stocks do well. And typically October till May is when stocks do well, and so far it looks like that's what's happening. We've been moving up through October, so it's got seasonality on its side. I just want to show you one other chart with the S&P 500. This is the 5-year chart of the S&P 500, and I am going to draw on this and just show you the real long-term upward trend line, which kind of goes like that. I'll make it green. So there you can see really where the market found support, and the question is, does that hold? What we want to watch for is, does the market make a falling top here? And I talked about this back in August when the market broke here. I said what you have to watch for now is, does the market make a falling top and then move down through there? If that happens, we're in for probably a lengthier bear market. For now, the bulls remain in control, but they're struggling. They're struggling with that little trend line of resistance right there. And this next week or two is going to be critical. What's going to determine what happens? Probably what's probably going to happen is the earnings are going to be the focus. Now, some of you are telling me that you're not seeing the video. I've got 2 people telling me that anyway. Can I just want to check that others can see the video okay? Yeah, it looks like most of you can. So if you can't, I would recommend just logging out and logging back in again. It may be something to do with your computer that's preventing it. I am recording this video, so you'll be able to watch the video of it later. But it should be working for you, because everything else, everybody on the chat is telling me that it's working okay. We just got a couple that aren't. All right, so continuing along. Sorry, I was getting a little distracted there by seeing these messages that people were having trouble seeing what I was talking about. Okay, so that is the S&P 500. Just for giggles, let's look at the small cap stocks in the US. So this is the Russell 2000. If you're a trader, if you like to trade alpha stocks, stocks that make good moves fast, the stocks go from $2 to $4. They're, of course, smaller caps, often micro cap stocks. And this is kind of an important index for that, because it really shows the life or lack of life in that area right now. But again, this market is flirting with its downward trend line. So, we've had general selling pressure through the summer, and we're now just testing that. Could be an inverse head and shoulders. There's a shoulder, there's a head. Could this be the other shoulder? Now all we need is a break through the neckline. Could be. So that's what you want to watch for on the IWM. And if that breaks, then I think trading will get a little better, at least if you're stock specific. I've actually found trading really going well right now, but I've been focusing on the ETFs, which are very volatile because there's uncertainty in the market. So I've been trading the S&P 500 ETFs, the Russell, or not the Russell, the VIX related ETFs. I'll talk about that later when we get into day trading. All right, so that's a little overview of that. Let's look at the US dollar because as I said, it's a real critical chart for commodities. So here's the US dollar chart, and this is a 8-month daily chart. I'm going to show you a weekly in a minute. But for now, let's just consider this one. Just put that in the middle there. So falling tops are a sign of pessimism. You can see over time we've got falling tops. We've got support right around in there. The reason this chart has lots of air pockets in it is because, of course, the US dollar index, which is what this ETF is based on, is really based on the US dollar versus the euro, the yen, the Canadian dollar, Australian dollar. I think the biggest is the euro, the second biggest is the yen. So those markets obviously trade when we're sleeping in North America, and that's why you get these a lot of gaps on the chart, because that currency is trading almost 24 hours a day, if not 24 hours a day. All right, so we've generally got a bearish pattern on the US dollar right now, which is good for commodities, probably why oil and gold have been a little more stable lately. We could see the US dollar rally up into here. That'd be pretty reasonable, and then start to retest to the downside. But that's a negative pattern. Now, if we make this a 3-year weekly chart, you can see that this descending triangle is on the end of a pretty strong upward trend. So that makes it less of a bearish pattern, because the trend into the pattern was up and so strongly up. This could just be a little bit of consolidation phase. What you want to watch for is, does this downward trend line get broken, or do we break through support at 24.5 on the UUP? So I would say an upside breakout through 25.5 or a downside breakout through 24.5 are real critical for the US dollar. And again, that's the US dollar ETF. Obviously, it would be different if you're looking at the chart of the market itself, or the individual currencies as well. The pattern to me looks more likely to move down, simply because this has been a number of months that we've been moving down like this, but given that upward trend, I'm not so sure. Now let's take a look at some of the commodities. Oil. So that weakness in the US dollar has given some support to oil. Doesn't hurt that there's some conflict going on in Syria, and you never know if that can grow into something bigger. Right now we've got a rising bottom. So we broke the steepest downward trend. We did that at the end of August. We've been building a sideways pattern. We actually broke from a little pennant pattern there early in October. It hasn't really had much follow through yet. So this is something to watch closely on if you're a Canadian investor, obviously, because it's going to have a big effect on the Canadian stock market. I take a look at this every day, because I know that when it goes, you can see the energy stocks really make a move. You think let's just take a look at an individual energy stock here. So Surge Energy, which was a stock that I wrote about in my weekend newsletter, 280 to 340 on a percentage basis, that's a 20-25% move that it made in just 4 or 5 days on the strength of an improving oil market. And you can go through countless oil stocks. They really have a high sensitivity to what oil does. Many of them are really oversold. And when oil starts to move, the stocks start to move, and it becomes pretty fun trading, I would say swing trading those energy stocks. So that's why you want to keep an eye on oil. So what I do every morning as part of my morning routine is I take a look at, what is the oil ETF doing. I just pull up oil, make this say a 30-minute. And, if I don't see any strength there, I don't really pay much attention to it. But on days like this, when we were breaking through some resistance, well, then I know it's time to maybe swing trade some oil names, and I'll do that. Right now, it's got some work to do. It's got to break this little downward move there. Okay. Fear, VIX. So the VXX is an ETF that's based on the volatility index of the S&P 500 futures. So in the futures market, there's implied volatility, how much of a premium people pay for the futures. And that has an ETF, VXX. I trade this a lot when the market is correcting. Most of the time, you don't want to touch this thing. So for example, here, I never did a single trade on the VXX through here, but when it starts to come alive, like it has been since the middle of August, it's actually a lot of fun to trade and very easy to trade. Well, I shouldn't say very easy, that's not fair, but it's very reliable if you have the focus and that sort of thing to trade. Right now, it continues to move lower, shows us that fear is coming out of the market, but this can erupt at any time. So another thing that I look at every morning is what the VXX is doing. You can get leverage on the VIX through some ETFs like UVXY. So this one is a double leveraged ETF on the VXX. There's an inverse ETF on the XIV, something I traded today. I bought the XIV late in the day as it made a little rally, made a decent little profit, but for a 1 hour trade, I guess. This goes up when volatility comes down. As the market stabilizes, this tends to go up. So I'll trade that in the VIX a lot. All right, so that's a little bit of a market overview. Now, what I just showed you is basically the analysis that I do every weekend with the Stockscores Market Minutes video. And so I encourage everyone to go to YouTube and subscribe to my YouTube channel. Just do a search for stockscores.com, spelling out the word .com, D-O-T-C-O-M, and you can find the Stockscores channel. Subscribe to it. That way, as soon as I upload the new video for the week, or any videos for that matter, you'll get an email alert saying, hey, there's a new video from Stockscores up there. You don't have to wait for me to email it out. All right, so that's the kind of analysis I do every week in the Market Minutes video. You can also see the Market Minutes video on, for some reason, if you go to the Stockscores homepage, down in the bottom, oh, where is it? Here. Yeah, bottom right of this page will be the latest Market Minutes. I haven't updated it for this week, so it shows why you want to subscribe to the YouTube channel, because it would give you the up-to-date list. I better fix that. All right, so let's go back to our agenda. Position trading market scan. So what we should have gathered from our market analysis is that the market isn't really helping us right now. You know, as a swing trader or as a day trader, the bounce back in the overall market in the last month or so has been pretty good, not even a month, since the end of September. That's been fun. We've now stuck in this little sideways range right here. Big picture, it's a choppy chart, not really trending. And so that makes it difficult to trade individual stocks. The beta factor, which is the overall market, is stronger than individual stocks. Now, we still get the odd individual stock that makes a good move. Weight Watchers the last couple of days has been one, because Oprah Winfrey said she was buying or had bought a 10% stake in the company. But generally, the market's not all that helpful to individual stocks. So I want you to be pretty cautious with individual stocks. If we break that downward trend line that I spoke about, either in Canada or the US, we'll see that change. And seasonality-wise, that should happen. I still want to wait for the signal that it is happening rather than just buy because it's the end of October. So with that said, we're going to do a couple market scans, the Stockscores Simple and the Abnormal Break Scan. So I'm going to jump over to the Stockscores market scan here and go to one of the preset scans. So for members of Stockscores, you'll have access to these. We're going to run the Abnormal Breaks Canada first. This scan looks for stocks making statistically significant abnormal price breaks. It's often a sign that something's going on. You can see here this very small cap company, 9-cent stock, only traded 600 times today, which I guess is okay. This to me isn't something I would trade because it's coming into a lot of resistance, but the market told you that it got excited about something. Seabridge Gold had a pretty good day today, trades in the US as well, and its sentiment stock score is above 60. A lot of gold stocks aren't in that situation, so that's a positive. It broke through some resistance today. Now remember, let's do multiple time frame analysis. So first of all, what's this pattern? You probably call it a head and shoulder bottom. There's a head, shoulder, another shoulder over here. It's not perfect. And we had resistance at about $9, broke through that today. Good volume on the breakout. That's what the daily chart tells us. What does the weekly chart tell us? Well, to do that, I just click on 3-year right here. And looking at the 3-year weekly, I see a problem, which is the problem that exists with most gold stocks right now, is it's still struggling with that long-term downward trend line. So I can draw that just like this, and we're just starting to break through it. So good, breaking from a rising bottom, but remember this is a weekly chart. Is it going to close this week above that downward trend line? So there's our first rising bottom. That's a positive. We're breaking through it. It's going to run into some resistance at $9, but I think Seabridge looks okay. I think everyone should probably have one gold stock right now because they are starting to turn, and believe me, I'm not a gold bug. I've been a bear on gold for a long time. So for me to say you should own one gold stock, that's a big change because I've been pretty bearish on the group for a while. But I don't think you should own 5 or 10 gold stocks because it's still in the early stages of its turnaround, and it's far from certain that it will in fact turn around. All right, moving along, bird construction, little pennant pattern here. Daily chart looks okay. Running a little far away from its upward trend line. If I was to draw an upward trend line on here, you'd see we'd be quite far above it. And so that puts us at the top of the channel. So let me explain what I mean by that. So I'm going to highlight this chart so I can draw on it. And I'll just start drawing some lines here. There is the sort of bottom of the upward channel. Now if I right mouse click on this and go copy and then paste, I'm basically going to get a parallel line. And there you see the problem. It's right at the top of its upward sloping channel. Normally, in a good market, I wouldn't really care about this. I'd say, well, it's breaking from a rising bottom. It looks like it can start a new trend. But in this market, I find that people are selling strength and maybe buying weakness. So I would wait for a pullback on this based on this time frame. Now, remember I said multiple time frame analysis. Let us look at the 3-year and see what happens. All right, so in the 3-year, my long-term resistance is at $15. Currently, it's at 13. And support is, just for simplicity, we'll call it 12, probably a little lower. So we've got about $2 of upside and $1 of downside. So it's right on the cusp of what's acceptable to me. I want 2-to-1 reward for risk potential. So again, it's good. It's not great. In a strong market, I'd probably be all over it. In this market, I'd be cautious. Wajax, breaking from a rising bottom, looks like it's breaking a downward trend. I don't love the chart. Let's take a look at the 3-year. Well, not bad here because it has fallen away from its downward trend line. So let me highlight this for you. So there's that downward trend line, and then you have this one here. So that's the problems it's facing, is it's facing a short-term downward trend line right now, but it's got decent upside to the next trend line break. And again, this is a 3-year weekly chart. I personally would leave this one alone. I think there's a lot of volume that traded in this price range at the start of this year. I think it's going to get stuck at the $25 to $27 range, and I would wait on this one. I don't think it's quite good enough. All right, so this is the kind of analysis that you should be doing when you look at these stocks. Look at trend lines, look at patterns, and look at them on multiple time frames. Here's Quebec Core. Blow that up. What do we see there? Well, a couple things stand out to me. First is it's breaking its downward trend line on this chart, and it's doing so from a rising bottom. So I'll draw the lines. There is the trend line. And here are the rising bottoms into that. So you'll all probably know my formula for a reversal of trend is a break up through a trend line from a rising bottom. So it's done all that today. Problem areas, volume, pretty light. Okay, that volume isn't exceptional, so the buyers didn't show a ton of enthusiasm. It's got a fair bit of resistance right in here that's going to limit its upside. So I think it's good, not great. Let's take a look at the longer term time frame, because again, I want to reinforce we're always looking for that longer term time frame. If I could get the chart to change here for me. There we go. Okay, so there's the 3-year weekly chart. You know what, now I like it a little more. Why? Because it's basically pulled back to its trend line on the 3-year. So I'll draw this out for you. So the 3-year time frame, see how it kind of just hit that now? And that tells me that it, was a fairly strong stock for the last few years. It's had a rough 2015, but it almost looks like it wants to turn around and continue higher. So I would say if you are looking for a relatively conservative stock to throw in your Canadian portfolio, this is not a bad choice. It's going to be a longer term hold. Has a little bit of yield, not a lot, 0.5% yield basically, so not outstanding, but it does pay you something to hold it. But I don't think it's unreasonable that this could gain $3 to $4 in the next few months. So 10 to 12% gain, and it's going to pay that 0.5% yield. All right, Linamar, breaking from a rising bottom, breaking a downward trend line. That's what stands out to me on the daily. Take a look at the 3-year. 3-year, bouncing off of its upward trend line. So here's another, actually I'm going to make this a little bigger. So here is another chart. And taking that trend line just like that, pretty fair. So Linamar, obviously a big winner in the last couple of years. I've traded in and out of this stock a few times. I've unfortunately never held it long term, but it's done well for the person who's held it long term. And it looks to me like it probably wants to resume the upward trend, probably get stuck in the high 80s, but mid 70s to high 80s, not bad, probably a 2 to 1, maybe 2.5 to 1 reward for risk potential. So again, another relatively conservative stock for those looking for that sort of thing. All right, so that's the Canadian abnormal breaks. Now the other scan I wanted to do tonight is the Stockscores simple scan, which is a good position trading scan. And I'm going to do this one on the US market just to change it up a little bit. And so we got 79 stocks. We'll go through these a little more quickly. If I see something I like or that has potential, then I'll do some analysis on it. So here is Sirius Satellite Radio breaking to new highs for the year. You can see it keeps getting stuck at $4. It's trying to get through 4. Volume is pretty strong. 3-year time frame, right at that resistance level. I think it has a little more work to do, but I like this chart. This is a little cup and handle pattern. I would just like to see it show a little bit more strength and maybe close out the week at 410 or better. I think if it can do that, close at 410 or better this week, sets up as a pretty good long-term position trade. Let's take a look at the intraday time frame. Intraday time frame today, it broke from an ascending triangle. So there is that little ascending triangle that's been building for a couple of weeks, I guess. And it broke today, right at the end of the day. The fact that it broke right at the end of the day tells me that something was happening. I'm going to just change this. I want to change this to a shorter term time frame. Yeah, it was pretty quiet until that last hour, hour and a half. So something got people excited at the end of the day. Volume not exceptional, but at the end of the day, it kind of picked up. So it looks to me like someone was accumulating the stock at the end of the day. I think that's a good one to watch tomorrow. It could be setting up for that long-term breakout through that 410 mark. There's Seabridge again. We talked about that one already. I'll just cycle through some of these a little quicker. Here's a stock that has been going up for about a month. It's a good hold, it's not a good buy. But if you were doing these market scans every night, you would have found it on this day because I'm almost certain that it would have come up back here. Good volume, breaking through resistance from a pennant pattern. So if you do your Stockscores simple market scan on a daily basis, you're going to find these. You're also going to find them too late, but that's just the nature of doing this every day. The Stockscores simple strategy will reveal stocks that are already been going up for a while, as well as those that are just starting, because it looks for stocks that are strong. 8x8, good strong day on 8x8 today, but the chart is pretty choppy. Let's take a look at the 3-year. Yeah, I don't think it's quite good enough. I do think it's more likely to go higher than lower. It's breaking its downward trend line right now, but I don't really like the risk reward of it, so I think I would pass on that one. Again, I'm going to cycle through these a little bit more quickly. Here's CBZ, kind of made the break earlier in the month, getting some follow through now. Excuse me, sorry to cough in everyone's ear. I'm going to go through these pretty quick. Here's Boyd Gaming. I like that it has hit this resistance at 18 here, pulled back, hit it again, and today is breaking through. The lack of volume doesn't excite me, not real strong volume. 3-year weekly, good upward momentum. I think this is a strong stock that's going to continue higher. And what I would probably do with it, if you have an interest in the name, is go to the intraday chart and just look for the break of a pullback on the intraday. So for example, today it broke in the morning, pulled back, and then broke the pullback about 2 hours before the close. So that's the kind of timing you want to get. Right now it's run up a little bit. If it can pull back again, maybe it goes up to 1860 tomorrow, pulls back to 1820, let's say, and then starts to move up again, that's a little safer way to trade it. All right, continuing along. Now you notice I'm going through these pretty quick because we've got quite a few to go through, and I don't want this presentation to take all night. So I will stop when I see something that I think deserves a discussion. So far I haven't seen anything that's, total wow opportunity. Here's Hawaiian Holdings. This was my feature in the weekend newsletter, not this weekend, but the previous weekend, when I featured a couple of airline stocks, Delta and Hawaiian Holdings, which is Hawaiian Airlines. You can see there that lengthy sideways trading range broke out right here, and it has just been moving up nicely since then. It's probably gained 10 or 12% in just a week or two. And that's the kind of thing we want to watch for when we're doing this market scan, is watch for this day right here when they're just starting to break and move up. Okay, continuing along. And I found Hawaiian Airlines doing the same scan I did tonight. Just looking through stocks that are strong with good sentiment stock scores, which is what the stock score simple strategy looks for. This Myriad Genetics is not bad because it showed some strength, pulled back in a little flag, and now it's starting to go again. It looks like it wants to take a stab at getting through that $42 resistance, 41 and a half. I'm not sure exactly where it is. It's probably 41 and a half. So it is trying there. I think that's one to keep an eye on. Now looking at the intraday chart, there you can see the resistance it's got to deal with. That's at 41 and a half. So I think it goes up to 41 and a half, gets stuck, and then maybe it breaks out through 41 and a half. That's what I want you to watch for. If it plows right through 41 and a half without stalling, then it's just too risky for me. I'd rather buy it on a pullback after that. So, the market is so competitive these days that when you get big runs quickly, the trading computers, the high frequency trading computers, they'll come in and sell the stock and then buy it back on the pullback. So, you got this extra efficiency that comes from these computers being such a dominant force in the market. So I just wait for either a pause under resistance and then a break, or if it breaks without pausing, wait for a pullback on that one. Okay, how many more we got? A couple more pages here. What I look for, what I focus in on, are stocks breaking from rising bottoms, breaking through resistance from some relatively low volatility. So here is a stock that's broken its downward trend line. It's now trying to break from a rising bottom. It tried that today, pretty strong volume today, kind of failed. It didn't hold the gains. Let me just see how the intraday chart looks here. Yeah, I think this was definitely one to keep an eye on. The semiconductors, Intel's been doing great. And so maybe it's time for CLAC to play keep up. Pays a pretty good yield, 3.95%, like that. I like that it's through resistance on the intraday. Daily, wish it had been a little stronger, but I think this is one you got to keep an eye on in the next couple of days here, as it could go for a little bit of a move. Obviously, it's a more expensive large cap stock. It's not going to move 20% in a day, but if you're looking for portfolio quality type names, it's one to keep an eye on. Intel's been the top performing stock in the Dow, I believe, this year. I'm pretty sure I heard that. I think it's up significantly, or maybe it was the top performing stock since the low in August. That's, I think, what the stat I heard was. So it's been doing real well. Maybe I'll show you the chart of that in a minute. Okay, so we're almost done this scan, and then we're going to move on to some day trading stuff that I did today. I get a lot of questions about how I go about setting myself up for the day and making judgments on where I'm going to focus, that sort of thing. I'll be talking about that in a moment. Disney, I bought Disney, don't remember the exact day, probably right in here. I think I bought it the day after the bottom. And it's been moving up nicely ever since. I just felt really got oversold. And these guys are launching the Star Wars movie in December, I think December 18th it comes out. And I just think the stock's going to move up in anticipation of that. I don't love it to buy it here at 110. I think, it was a bargain in the 90s. And I think it goes to 120. I don't really love the risk reward of it here, but that's some of the thinking I have. I remember the day that I bought it, I thought, this stock looks terrible. It had really been hammered lower, but I, recognize that it closed above its open after hitting a low, and it had that whole Star Wars thing coming down the tube, which I think is, whether it's huge or not, I think we all assume it's going to be a huge box office, but whether it is huge or not, it's going to bring a lot of optimism to the stock because people are going to be expecting that it's going to be huge. Of course, Disney bought the Star Wars franchise from George Lucas, and the merchandising, the box office itself, all the spin-offs that comes from that are big for the company. And I'm hardly a fundamental investor, but sometimes you just got to think about catalysts. And when a stock is really suffering and there's some big catalysts coming down the road, it makes me step in and maybe bottom fish something. Okay, don't see too much else, so I think we'll call it on that. I just show you Intel just for fun. So the symbol for Intel is INTC. You can see the real big move up since the lows. I think it's about a 30-something% gain. And it's now coming into resistance. But a stock like KLA 10 Core is never really suffered as much, and it's now breaking its downward trend line, starting to turn. So it may be that the whole semiconductor space is just picking up some optimism. All right, let's just jump back to my agenda here. All right, so day trading, what happened today? So I'm going to jump over to TradeStation and just show you what I did today. We're going to go to a different screen here. We're going to go to this screen. So these are the things that I was trading today. I also traded a couple others, Fit and GoPro trade. Okay. So what I'm doing right now, because individual stocks aren't great, there's maybe one a day that's got a good move in it, one or two a day. Some days there's none, some days two or three, but generally it's like one a day. Yesterday Weight Watchers was a big mover, but most of the time right now we're not seeing some big moves because I think investors are really still quite concerned about what the overall market's going to do. So if people are concerned about what the overall market's going to do, trade the overall market because there's lots of volatility in it. So every morning I start my day by looking at the S&P 500. I'll usually look at it in the pre-market, get a sense of whether the market's going to open up or down. I'll look at the overseas markets. What did Europe do? What did the Asian markets do? If you get the CNBC app on your phone or on your computer, you can see all of those pre-market movers in real time. And so get a sense of what's going on. So when I wake up, I have my phone, I just take a quick look at what's been happening in the pre-markets to figure out, is it going to be an up or down day? Now, this screen that you look at here, I kind of messed you up because I was messing around with it earlier today, and what this should be is 4 different time frames. Okay, so I've got the 2-minute, the 5-minute, the 30-minute, and the daily. So let's start drawing lines. On the daily, I'm coming into some resistance at the downward trend line. On the 30-minute, I'm stuck in a trading range, but this morning it was trying to get through resistance. Okay, so building optimism because we've got rising bottoms, but also kind of stuck in a sideways range. This morning tried to break. I actually lost money buying that breakout. I went long the SSO, which is an ETF that goes up when the market goes down. So I bought that, I'm trying to think when I bought it here. I know I bought it twice. So I think I bought some here, and then I added to my position here, and then I took a loss when it went down through this zone. That's how I started my day. I had a -2 loss from the get-go. I'll go through some other trades that I did in a moment. On the 5-minute, generally optimism. You can see here we've got general optimism because we've got rising bottoms, but we're also generally going sideways, which is what shows up in the 30 minutes. So it's been kind of a grinding market the last 2 or 3 days. Okay, so that's how I do my analysis right now because I'm focused on trading these index ETFs. I'll look at the S&P. I will never buy the SPY because there's better ways to trade it than buying the SPY. If I think the S&P 500 is going to go up and I get a buy signal like I did here, which came with this breakout through this resistance here, then I will buy the SSO because it's a double leverage ETF. I don't have to buy as much in dollar terms to take advantage of the move. So I bought some SSO, again, I think it was here, and then I bought some more here, and it failed. It was making some money, and then I got stopped out for a -2 loss. What I should have done at that point is gone long the VIX, and I was kind of wrapped up in that and a couple other trades, which I'll show you in a moment, and I really missed a good entry signal on the VXX because the VXX broke a downward trend line right here when it did that, and it shows up a little more clearly on the 2-minute. So I'll just draw this like this. And so right there, that was a good entry on the VXX. And I remember looking at it and I was kind of getting out of my SO trade. I was a little bit, I wouldn't say mad, but unhappy that I was taking a loss after things were looking like the market was going to break on the 30. And frustrated, I missed the trade. It ended up making a pretty good move from there. Not a huge move because there's not a lot of volatility in the market today, but still not so bad. Okay, so that's how I'm doing the analysis. Now what I do is when I start my day, I want to see what's the story of the day. And I'll look through the market, I'll look through the VIX, I'll look through some of the commodity ETFs like gold and oil, and I'll go through them and I'll say, what's the story of the day? So when I looked at the market this morning, I saw a market that was moving up, but not, it started down, then it was moving up, but gold actually opened up this morning. And so that told me that gold might be one of the stories of the day. Also knowing that gold recently kind of broke this little downward trend line on a shorter term basis in the last little while. So I was feeling like maybe gold was the story, but I didn't really love the chart of gold. So I thought, well, let's take a look at the gold stocks. Now I look at those through NUGT, which is Nugget. It's a 3 times bullish ETF based on gold mining stocks, not based on gold, but gold mining stock. It tends to move with gold, but it actually will often move quicker than gold and better than gold if gold is firming up. So that to me was the story of the day. So I took my first position in NUGT right here, 10 o'clock, and just draw the reward for risk lines at that point, like something like that. And I added to the position 3 times, and I'm sorry I don't remember the exact times I added to it. I'm going to sort of guess that I probably added some here, which would be 12:10. I may have added some here as well, 11:48, and then I think I added some towards the end of the day around 2:40. I sold it all at 15:45. I got out between 46.90 and my low was, 46.90 was I think the high exit, and my low exit price was 46.78. Turned out to be a great trade because I got out pretty close to the high, and you can see in the last 2 minutes it kind of got hammered. Probably as day traders were all dumping the ETF into the close. So it ended up that I made 6 RR on this trade. 6 RR? Yeah, I made 6. On this one, even though you can see I only made 1, 2, maybe 2.5 on the initial entry, don't forget I scaled in a couple times, 3 times. So overall I made 6 RR. Now I lost 2 on the SSO, I made 6 here. Just to tell you the other trades I did today, XIV, I bought XIV right here, actually bought it twice. I bought it here and lost. I bought it here and sold it right about there, so that turned out to be good. And GoPro, I bought here and kept it until just about the close. I sold it at 30.38 for a small loss. Well, not a small loss, about half a RR loss. And then the other one that I did was Fitbit. Also an abnormal stock at the start today. I bought it, I think right here, and got stopped out here. Good that I got stopped out on it because it actually went quite a bit lower. So that was my day. It was, to be honest, not a great trading day. My success rate was about 40%. I lost money more than I made money. However, at the end of the day, I actually made, gotta remember now because I don't have my screen up, I think I made 3.5 RR overall. So why did I make money today? Because when I had a trade that was working, which was the gold trade, a nugget, I scaled into it. I added to my winners. I never added to a loser. I just went a little harder into the trade that was working, and as a result, even though I had a low success rate, I made decent money for what I would consider to be a crappy day. Okay, and that kind of drives home a point about trading is sometimes you have to just go where the action is, and if something's working, stick with it, and if something isn't working, cut it loose and try not to take the big losses on it. Okay, so that was the agenda in terms of my presentation. Upcoming events and polls. I'm going to put up a couple polls now. Now, I've been having people ask me a lot for the last few months, am I going to start doing my live trading webcast? So for those of you that have never participated or heard about my live trading webcast, basically you see my trading screen, so you would watch this screen as I talk about what I'm looking at, talk about what I'm buying, what I'm selling, why I'm doing it. And you basically see my trades in real time. Some months I only open it up to my active trader students. Some months I open it up to anybody, but I don't really teach during it. I just tell you what I'm trading. And I did it quite a bit before the summer. Every month I was doing it. Usually I do it just for the opening 2 hours of the day because most of the trades come then, but sometimes I do it for all day. It really just depends on the state of the market. Anyway, so a lot of you have been asking me when I'm going to do that again. I haven't been doing it because I've been pretty focused on my trading and it's been going really well, so I didn't really want to mess with that, but I may start it up again. It kind of depends on the interest level and, again, what effect it will have on my own trading. So what I'm going to do is just, if you have an interest in this, I'm just going to post this thing here. Just say yes or no. I'm not going to bug you a lot, but if you say yes, then I'll make sure you get included on the email to be informed of when the next active trader class or session is going to come. So just click on yes. Don't put in the chat room yes, because that won't help me. And I will make sure that you get an email if I do it again. I'll probably announce it in my weekend newsletter and do a couple emails. But again, I'm not certain that I'm going to do it. I may start in November. It kind of depends on how things go for me. Okay, so I'm going to take that down in maybe 10 more seconds because I have another poll I want to put up for you. So the other thing that I'm getting asked a lot is when am I going to teach a class again? Now, what I've been doing the last year and a half is virtual classes where I teach just like I am tonight with webcasts. And we've got lots of online training material, and then I'll do some live training as well where we do market scans together, trade the market together, that sort of thing. It's been pretty popular doing it that way. So it's nice because I can teach anyone in the world. It doesn't have to be in the classroom. So I may start to do that again as well, but it really comes down to whether there's enough people that want to do it and how my time goes. So I will just stop this poll and bring up the other one. If you have an interest in participating in the active trader class in the future, it's the active trader course is what is it, $3,495, $3,495. The investor course, $2,495. It's a lot of it is stuff that you have to do on your own, where I've got, I don't know, hours and hours of videos that you can look at. You don't have to watch them all, but you select the ones that are pertinent to your situation. And when we do them, I'll also do some live training to sort of give you on the job training, showing you actually how I do this. With the Active Trader course, you get all my TradeStation code, lots of videos on how I use TradeStation to trade. I've been trading for 25 years. I try to teach you everything I know in maybe a couple months of work. You will not learn to be a great trader in 2 months. Don't don't be disillusioned. You can learn the mechanics of it in 2 months, but then the rest is practice, right? So practice takes time, but I've had a lot of students do really well with that, and I may teach it in November. I haven't decided yet. So if you would like me to inform you about upcoming courses, just answer this, yes or no, and I will again make sure that I email you about that for possibly a course mid-November is what I'm contemplating. I'm spending the winter in Hawaii, so one of the problems I have is that the trading day starts at 3 in the morning for me. I get up at 3, the markets open at 3:30. I don't have all my big screens with me, so it's a little bit tougher for me to do those live webcasts, but I figured out a way to get it going. So I hopefully will be able to do that, but I just haven't decided yet. It's a little hard to work hard when the ocean is outside your door, so we'll see how it goes. But anyways, I'm starting to get bored of the sun. I might do some teaching in November. We'll see how it goes. All right, so if you have any questions, please don't hesitate to ask. We'll take a couple minutes for that, and then I got to run out and pick my kids up from school. My wife hiked the Inca Trail yesterday, just finished, and she's doing a little trek down the Amazon next, so I missed her mom for a couple of weeks, which means I got to go pick my kids up from school. Someone's asked me about thoughts on T-line trading. Sir, I don't know what that is, but you do put in things here, 8-period moving average. I do, I mean, I think pullbacks through the 8-period moving average and then a break a pullback is a good thing to do. So I think that is has some legitimacy. I don't know what the T-line is. That's obviously someone else's term, so I can't speak too much to that. But you know, I've got my own strategies. I do them. There's 1,000 ways to make money in the market. I can't be certain of, you know, or comment on what other people are doing. Based on the results of the Canadian election, what are your thoughts on where the Canadian markets will go from here? Well, I think my analysis at the top basically answered that. I think the election is irrelevant. The market will go where it goes, more based on what the US dollar does than anything else. And that analysis I did at the top, I think, is the best answer. So if you missed that part, you'll be able to watch the video and get to that. How much capital do you need in order to trade effectively? I think the answer to that question is how much your time is worth. You know, if you have $10,000, that gives you $30,000 of buying power. That means you maybe can make $100, $200 a day. Some days you'll make 1,000, but you know, you got to think maybe 200, 300 a day if you're good at it. If that's what your time is worth, then that's sufficient. If you have $1 million, you're, you know, obviously not going to be able to day trade it so easily because it's a lot more capital. So then it becomes a question of partitioning some of your funds into position or swing trading and some into day trading, that sort of thing. So someone's asking about individual stocks. Unfortunately, I just don't have time tonight. Like I said, I have to boogie out of here pretty quick. Are we topped out in the market? Again, look at my analysis from earlier in the presentation. If you missed it, I will send out a video of that sometime between now and tomorrow, and you'll be able to check that out. I notice you have a red indicator. Is that new? No, I just probably changed the color on something. Do you exit day trades based on RR lines? Typically with day trades on individual stocks, mostly what I'm doing right now is holding until the close. I find that works the best. If it really moves quickly, then I'll use my RR lines. Like if it gets above 5, I want to protect my profits. When I'm trading the overall market, like the S&P related ETFs, the VIX, that sort of stuff, I don't use RR lines for that. I use more patterns. Walmart implications for Santa rally. I don't know. I mean, Walmart, I think its problems are a little more specific to problems within it. I think one of the big problems for Walmart is that people are buying stuff online. Being here in Hawaii, you really realize how much people shop on Amazon. As an island, you kind of have to if you want anything good. So tons of people are buying stuff on Amazon now. And even, you know, you go into Best Buy, you see the TV you like or the Apple product you like or whatever, and then people just go buy it online because it's cheaper. I think that's the problem that grips a lot of these retailers, is that people are shopping online. You know, it's just becoming a real headwind for a lot of the mainstream retailers. Is it possible to do day trading without TradeStation? Sure, lots of people do day trading without TradeStation. My approach with my indicators, I've written my own indicators for TradeStation. I think they give you a little bit of an advantage by using TradeStation, but I mean, not everyone uses TradeStation. Lots of people make money without it. I just think for my approach, it works good. And for what it costs, I find that the benefits you get from it pay for themselves. You know, if TradeStation costs $300 or $400 a month, but it gives you one good trade a month that you would have otherwise missed, you're going to make that money. Someone's asking, what are RR lines? RR stands for reward for risk lines. It's something that I teach in my courses. Do you mainly trade U.S. stocks? I trade wherever there's action. So lately it's been the U.S. because that's where the action's been. But when the oil market was bouncing back, whatever it was, 2 or 3 weeks ago, I traded quite a few energy names in Canada. I prefer to trade the Canadian market. It's easier to trade. It's less competitive to trade in the Canadian market. It kind of feels like you're, you know, playing hockey against a bunch of kids that are half your age because it's just easier. You're not trading against computers and all the people that trade the U.S. market, but it doesn't always give you all of the candidates and all of the opportunities that the U.S. market does. So when Canada is hot, believe me, I trade it lots. But right now, I trade mostly U.S. Are U.S. commodities going lower? Again, let's just go back to the analysis I did at the top. I talked about oil, gold. It really depends on the US dollar. And so I did that analysis at the top of the presentation. Take a look at the video for that. Let me just see. I'm sort of trying to rush through and just pick out some of the questions that I think most people want to hear. Okay. Can you use TradeStation for the Canadian market? No, you cannot. Do I short stocks or just buy the inverse ETFs? I pretty much just buy the inverse ETFs. I should start shorting. I've actually been messing around with some strategy. I used to short a lot, but I hadn't done it in a while. But a lot of these large cap stocks, which are quite shortable, are giving pretty good trades these days. And so I probably will start to do that a little more. Sorry, I still have this poll up. I should close that for you. So I generally buy the inverse ETFs, but I think you can short as well. Why not? The challenge with shorting is getting inventory. And you know, if you want to short Facebook, it's easy. If you want to short some $2 stock, it's pretty hard because they don't have inventory. Would it not be a better return to purchase less expensive stocks? Normally it is. Yeah, normally I like to trade the lower price stocks because you get a better bang for your buck. But that's not where the action is. There's not been a whole lot of movers that with liquidity. You know, I've got a fairly large account, so I need stocks that are liquid enough to absorb bigger orders. And we just haven't had that kind of action in those smaller cap stocks. And again, that goes back to that analysis of the IWM ETF. Do I trade the UWTI, DWTI? Sure, when it's time. I haven't traded it in the last little while, but a couple weeks ago they were hot, they were moving. I just trade whatever's hot. I don't have any plan to trade something every day. I just go where the action is. I jump on and off the bandwagon so fast. I'm loyal to my hockey team. Other than that, it's about I have no loyalty to individual stocks. All right, so I'm going to wrap it up. And again, I did record this. As long as the recording worked, I will email out a link to it. It takes a while to upload it to YouTube and that sort of thing. So expect it probably sometime tomorrow. And I hope that you all had a good time tonight, and we'll see you again. If you like this, drop me an email or something. Let me know you like it, and I'll try to maybe do it once a month. Thanks, everyone. Good night.